Hello and welcome to the Global View on this Monday. Well, let's take a look at what's going on at a macro level. US Treasury yields rose and then eased on Friday as investors sought the safety of bonds amid fears of an escalating Middle East war. The 10-year yield was briefly a bit above 5% late on Thursday for the first time since July 2007, after Federal Reserve Chair Jerome Powell said the US economy's strength and tight labour market might warrant tighter financial conditions. Atlanta Fed President Raphael Bostic said on Friday that while inflation remains too high, it is coming down amid mounting evidence of a slowing economy that could prompt the central bank to begin easing monetary policy late next year, saying, I would say late 2024. We have to get a lot closer to 2% before we're going to consider it, before I would consider any kind of relaxation of our posture. Inflation is job one. We have to get that under control. Meanwhile, British retail sales fell more than expected in September in a sign of continued cost of living pressures there. Retail sales volumes dropping by 0.9% on the month. And the British sterling weakened slightly against the US dollar after that data. The Swiss franc hit an almost 6-week high against the greenback on Friday with the currency seen as a safe haven amidst rising geopolitical tensions. The Aussie dollar currently trading, let's check that, at 63.1 US cents. All right, well, to get across what's going on at a macro level globally and how that's likely to inform investment decisions, let's catch up with Anthony Doyle from Firetrail. Anthony, good to catch up with you on this Monday. Of course, also very much a focus with US earnings at the moment. What are you watching at the moment then in those terms?
Yeah, Andrew, obviously heightened geopolitical tensions in the market at the moment have seen risk aversion spike, but interesting to see those yields at the long end of the Treasury curve increasing to levels not seen since 2007. So that's having an impact on investor risk sentiment in the short term. Over the medium to long term, the focus very much is on those company results, which in our portfolio, we have 16 companies reporting this week. So our focus is very much on the bottom up. Top down, very, very difficult to analyse, particularly given the developments that we're seeing in the Middle East. But in terms of earnings season, we're actually expecting a fairly robust earnings season. So most sell-side analysts, the consensus are expecting a pretty flat season. We think we could see expectations, or we could see results actually to the tune of 3 or 4% above those expectations.
All right, so you mentioned you got 16 companies in your portfolio that are reporting this week. Do you want to run through some of those that, in terms of your expectations?
Yeah, so it was really interesting domestically that you saw that the most beaten up sector was consumer discretionary, and that was the sector that actually outperformed in August in the ASX 200. The reason for that was things weren't as bad as many had been expecting. And so the share prices appreciated accordingly for many of those Aussie names. And in the US space, our exposure to consumer discretionary is via a company named AutoZone. So we like AutoZone, very strong capital management discipline. They've bought back 90% of their shares since they listed. Any excess free cash flow generally goes towards share buybacks. And what we're seeing there are trends of firstly continuing to use vehicles for longer. So we're not seeing that new purchase cycle coming through for new cars, the result of higher interest rates and higher auto financing costs. But also AutoZone dominate in terms of their infrastructure for distribution. So if you're a mechanic, a professional, you want to turn over cars as quickly as you can, and AutoZone are delivering parts 4 times daily to these professional mechanics and professional businesses. So we continue to see strong demand. That's a relatively defensive name in the consumer discretionary space. Further afield in terms of insurance and wholesale insurance broking, one of our names is Ryan Specialty Group, specialists in hard to insure risks. We continue to see a fill-up in demand there, as we know the world is growing more complex, particularly on the cyber side. So hard to insure risks. Ryan are growing at double-digit rates, and we expect that trend to continue. Results likely to be confirmed this week.
Anthony, you mentioned, consumer discretionary. Interesting what's going on in that sector at the moment more broadly too, with those weight loss drugs, GLP-1, but the likes of from Novo Nordisk and so on. We've seen the result of that on those stocks here with CSL and ResMed suffering. Also, some of those stocks in the consumer discretionary space in the States, particularly Pepsi and McDonald's. What's your view of what's going on in that space at the moment?
Andrew, isn't it amazing to see how long the bow can be drawn in terms of the ramifications of these weight loss drugs that are coming out? So I've even seen earnings forecasts expected to grow for airlines because the passengers won't be as heavy. So the airlines are using less fuel. So there's a lot of that noise and almost nonsense going on in terms of investor analysis of many of the names. Some are very rightly, the implications are real. Some are more difficult to forecast. So we've spent about 300 hours on Novo Nordisk and Eli Lilly. There's a lot of variables that remain to be that remain to develop. But in the short term, focusing in on what matters for the weight loss companies. Firstly, it is still quite expensive in terms of administering the dose via injection, to the tune of around $1,200 per month. Secondly, the supply cannot meet the demand today. So Novo Nordisk, for example, are saying that they're going to double capacity and then double again within the next 5 years. And finally, we remain to see how the health authorities are going to support the rollout of these drugs and whether it will come under schemes such as Medicare, for example. So there are a lot of unknowns, and the market has been quick to price in a best case type scenario. We are continuing to analyze the implications of what the GLP-1 and the weight loss drugs may be. But certainly you have seen a raft of companies downgraded on the potential that you will see consumption reduce as a result of people not purchasing as much food as they historically have done if they begin to roll out these drugs in significant size. And that obviously has implications for comorbidity and associated illnesses as well.
Yeah, as you say, some of that well and truly overstated. That's an interesting anecdote just in regards to what the airlines and someone playing that thesis there. Anthony, more broadly in the consumer space, look, we have seen many fundies sort of pulling back their exposure at the higher end with some of those luxury goods, of course, having done very well. Given the consumer is under pressure at the moment, are you playing that particular area at the moment?
Yeah, we have zero exposure today. We're a high concentrated, highly conviction fund manager. So we don't have to own those names that look expensively valued and sell expensive goods. We've been cautious on the lower end for a long time, given the build up in inventories that we've seen for, say, Nike, Lululemon, Adidas, for example, registering 50-60% inventory year-on-year build-ups. And at the higher end, whilst they perform very, very well, companies like LVMH, for example, they actually are very expensively valued in our opinion, and hence we've seen better opportunities elsewhere. Now, that said, in terms of both domestically and globally, it's clear that interest rates have a distributional impact, and they're impacting those both from a demographic perspective, generally 45 and under, either those households that have a mortgage or those households that are renting. We've seen rent increases growing, and those are the parts of the economy, that's the part of consumption that's coming under pressure. And then the older demographic continue to spend well, particularly the wealthier cohorts of society. So demand may still be there, but it does look fairly expensively valued or fair value to us, and hence why we have no exposure to many of the upper end of those consumption names.
Anthony, a big focus this week will be 4 of the Magnificent Seven. We've got Alphabet, Amazon, Meta, and Microsoft reporting. What are your expectations there? What sort of exposure do you have to the Magnificent Seven? I guess it's pretty hard to avoid, isn't it? Particularly given what we've seen over the course of this year, how dominant they've been, albeit with a very narrow leadership.
Yeah, we're underweight the Magnificent Seven, but we do own two of those names, Microsoft and Alphabet. And whilst AI and the implications of AI, again, a bit like the weight loss drugs, are far-reaching, and much will be determined over time as to how that develops. We are more in the medium term in terms of both Alphabet and Microsoft. What really matters is the growth in the cloud. And for Microsoft, continued price increases on the Microsoft 365 suite of products as well. So we think that we could see some pretty robust results. We entered into the Google position earlier this year. It was trading on around 17 times PE, which looked attractive to us, not only from the cloud computing perspective, but also from the advertising uptick in terms of spending. So we're expecting fairly robust results from Microsoft and Google or Alphabet as we get updated later in this week.
All right, we look forward to that. Anthony, great to get across what you're watching out of US earnings season. Thanks so much for joining us from Firetrail.
Cheers, Andrew. All the very best.
All right, Jess, before we round it out, let's take a look at where we're expected to get going. As you can see, looking for a pretty negative start there, off almost 1%. That, of course, is given what we saw on global markets on Friday, falling a similar amount. That is the global view on this Monday, the open, just around the corner.